We are more than halfway through the month of February, and things have changed pretty quickly. In today's video, I'm going to take you through exactly what has happened this month, especially the part that surprised me just over the last few days. Let's dive in. So in good news, mortgage rates have inched down just a bit to right around 6.75%. Now that could change any day. Volatility has been very high, but so far in the month of February, the reports that came in were slightly better than expected. It's a good thing. Now, the one thing that did come in that I want to keep an eye on is inflation. Did come in a little higher than expected. However, the market reacted how it did. The investors weren't too spooked. So we'll see what the next few months of reports bring and if the Federal Reserve is going to change their path, but I doubt it. Inventory-wise, we're up a bit from the start of the month, 3%. Now, last year, we ended up about 10, 12% from the beginning of February to the end. So nothing too surprising there. And if that is an indicator, we should expect inventory to rise again in the latter half of this month. Time will tell if it does. But for prices, condo-wise, we're starting to see a little bit of deviation between the median and the mean prices, but nothing material enough to change course here. But condos are up about 4% year over year on that median average sale price. Looks like it's going to be a pretty weak month here in February in terms of the median sale price. It could bring it down a bit as it was rising again, but this is going to bring a little reality check to things. It's going to be the lowest one in nearly a year, which was one of the things that surprised me. But single family wise is the other end of the spectrum, still 18% year over year. And I don't expect to see a massive change there anytime soon. But obviously, even if prices stay the same over the next 12 months, that 18% year over year increase will just slowly decrease, right? A slower increase down towards 0%. Now, new listings. Here's the thing that surprised me. When I ran these numbers on the 15th, which is 4 days ago, recording this here on the 19th, it looked like we were going to have over 100 listings, new listings, by the end of this month. That's what pace we were on, nearly 4 new listings per day. Lo and behold, over the last 4 days, we have had 4 new listings total. So that has dropped our pace substantially to be in line with what we saw last year. At 85 last year, right now, we're on pace to have 83. So that is now going to be 2 months in a row of relative consistency compared to what we saw last year. So patterns are good. I like patterns. It means things are a little bit more predictable. Pending sales, however, we are on track to see a 33% reduction compared to last February, which has been a little bit surprising. Again, new listing wise, all things considered, all else equal, if the market is the same, if demand is the same, we should see similar numbers of homes going under contract. And we're going to see the same concern reflected later in the speed metric, but that did catch me off guard. Closed sales still on pace to be about where they've been the last few Februaries. Months of inventory, this is one thing that at least last year picked up steam from where it was in January. March is really where it did pick up some steam, so we'll see next month where that lands, but still very little inventory out there in the single family world, not enough to put any pressure on anybody. Median sale price for single family still going strong on a nice little 5-month ramp up. Obviously, hey, if we have a down month next month, it's going to really keep things pretty plateaued if you look on it on a slightly grander scale than just the last 5 to 6 months. That's why I use these charts, so we can really give some perspective and context to things instead of just saying, wow, over the last 6 months, we're up blank. Context matters. So days on market for single families still in a very comfortable range. Again, looking at that chart, looks like it's the high end, but anything prior to the pandemic, we are still well under that. Now for condos, still very stable, months of inventory for several years running now. Very consistent market. Now on this median sale price piece, if I were to have the mean sale price as well next to it, it doesn't have the same ramp up over the last few months. The mean is a little bit more consistent and more stable. So we'll see how that plays out over the coming months. And, if I have to do a side-by-side going forward, I certainly will. Days on market, again, very, very good, around 50 days. Now the speed here, again, speed, my own metric, is the number of new listings compared to the number of homes that go under contract. Put simply, how many new listings do we need to see one home go under contract? Historically, we've been at about 1.75 homes. Anytime we see a speed above 2, that gives me a little bit of pause. So if you look backwards, the last time we had a slow month above 2 was in January of 2023, which isn't that abnormal. Januaries tend to be slow, but we're potentially on pace for the slowest month in 2 years. So Is that a trend? Is it a 1 month blip like can happen? Time will tell. But it is going to continue to have an impact on the 6 and 12 month metrics and carry us up back towards the 2 mark instead of that 1.75 where we had been floating around for about a year, which was good. That's where we were historically, and we had some balance. Again, this is something I'm going to keep a close eye on because if this is the canary in the coal mine, I'm going to let you know. Now, where we're going, obviously, again, whether it's the speed metric I just mentioned, I have no crystal ball. I don't know what's coming. All I can do is bring you the data and give my assessment of what it all means. But mortgage rates being down from the start of the month is a good thing. Nothing material, nothing that I think is going to bring buyers off the fence if they're on the fence or waiting for lower rates, which are unlikely to come anytime soon. I just don't see it. I'd be shocked if we get at or below 6% this year. I just don't see a case where that would make sense. Inventory wise, again, are we going to see another 10% increase by the end of this month compared to where we started? Maybe, we'll see. But that 33% fewer homes going under contract that we're on pace for is worrisome. It's something that I can't explain just yet. I'm going to have some more context for the monthly market update when we get to March, for sure, once we really see where things shake out, because with these smaller sample sizes that we have here, this could be a nothing, right? This could be a couple agents who had some go under contract, didn't report them yet for the month. Could have happened over the weekend, and they're still just about to get out of attorney review. I don't know. And, if we see 5 or 6 or 7 of those, this is going to be an immaterial decrease, nothing to write home about. So I'm not going to raise the alarm or the red flag just yet. But it is something I do have a close eye on, and we'll track very closely over the coming 2 weeks to see if we have our first real downer of a month in terms of homes going under contract. Now, prices, again, single families had a great month. Condos a little less so. They've been not trending downward, right? We just had our highest one last month that beat the second highest one the month before. So this could be a blip. This could be lower priced condos going under contract. Some of the condo tells I've seen going under contract versus some of the bigger ones. So that's just a little nugget to give you something to think about. It's something for us to all process together and keep an eye on going forward. But price growth as a whole has been tremendous. Whether you track that over the last year, the last 2, 3, 5, it doesn't matter. But it's safe to say we should not continue to assume we're going to see double-digit price growth. At some point, that has to stop. It's not sustainable. Plateauing or going up to our 2 to 3 to 5% per year, it's how it used to be. It's what's normal. But again, I'm going to be bringing you all kinds of information on this, tracking it very closely as we continue to move forward. But if you have any questions, feel free to reach out to me any of the ways that you see here. If you want to work together, I just had an opening to take on another new client. So if you want some assistance, whether it's buying or selling, or you just want to talk things through, happy to help. But as always, I appreciate you hanging out with me. If you're not already, make sure you subscribe, because again, if this is going to be the bumpy ride that I think it might be, or at least the volatile ride where we end at the end, nobody knows, but I'm here for you every step along the way. Make sure you tune in, make sure you track everything that we're going through here. I'm going to bring it all to you as it comes out instead of a month or two late, which is completely useless. So thanks as always. I'll see you next time.